The euro has dropped, though, a bit today after hitting $1.40, its highest point since February. And European Central Bank President Jean-Claude Trichet making it very clear he intends to keep the euro on a steady path.
More than ever, I think that exchange rates should reflect economic fundamentals, that excess volatility and disorderly movements in exchange rates have adverse implications for economic and financial stability.
All right, well, our next guest says he has confidence in the ECB's current regime. When the euro was at $1.18 in June, he said buy, and he sees the currency going higher now. Axel Merk is the president of Merk Investments, helping oversee $550 million in currency-focused assets. Axel, great to have you back with Matt and me. So you have confidence in the ECB. How come?
Well, because their approach to monetary policy is far more robust. People were writing off the euro earlier this year, and what we said is that the entire way of providing liquidity is better because they are providing liquidity and they can withdraw that very easily. Those programs run out. In contrast with the Federal Reserve, where they bought these mortgage-backed securities, they're not in control of the balance sheet. They were extremely awkward about how to maintain that balance sheet, and now this bizarre way of trying to introduce quantitative easing. The European Central Bank looks like it has a steady hand, and Trichet has been very consistent. He has a very philosophical approach to it, and of course you can always argue that he has blinked here and there in trying to support some of these markets, but overall the European Central Bank approach has been consistent, and he's been applying pressures to the euro system to engage in reform. The sense of urgency hasn't gotten lost, and people are introducing really change to fix the things that are wrong in the eurozone.
You know, we talked with Joseph Stiglitz, the Nobel Prize-winning economist. He talked about a lot of instability caused by the flood of liquidity from both the Fed and the European Central Bank. He talked about how it's creating chaos, for the rest of the world. You don't see that, even in terms of the ECB moves?
I do think a lot of problems are caused by the easy money, but I think the ECB, taken all, is far more prudent than most other central banks, better than the Japanese, better than the Swiss, better than the Brazilians, better than the Brits, or better than the Americans. But by all means, the low interest rates are causing major distortions. And basically, though, the biggest problem is in the U.S., because in the U.S. we have homeowners who have still not downsized. We are subsidizing an economy here. And what that means is that as we have all this easy money, it goes somewhere, but it doesn't stick in the U.S. It feeds the precious metals. It feeds the other currencies, projects in Asia. In the eurozone, you don't have these locations, and as a result, the easy money doesn't cause the same sort of problems, at least not for the time being.
But you sound so sanguine, Axel. I mean, surely you're concerned, just like everybody else is, about the sovereign debt problems in Europe that haven't gone away. And Jean-Claude Trichet himself says that the risks to the economy are still to the downside, especially with the austerity measures being put into place. Aren't they sort of looking into the face of a world of hurt?
Well, first of all, I think the sovereign debt issues are global issues and not specifically the ones of the PIGS countries. I don't think Greece is going to do well anytime soon, but one of the things we've argued is that Europe will have a very strong currency on a backdrop of lousy economic growth. And basically what it comes down to is that the Europeans are printing less money and are spending less money than the Americans do. When you don't have a central treasury secretary, it's far more difficult to help somebody, but at the same time, it's also far more difficult to spend money. And in Europe, at least, they're tackling many of the issues, whereas in the U.S., we're far way off from recognizing things. And both on the fiscal and the monetary side, we have everything wide open, trying to have economic growth at just about any cost.
Axel, let me ask you, because the Brazilian finance minister has said, you know, we are in the midst, basically, of a worldwide currency war. Is he right?
And he's wrong in the sense that I think we're at the beginning of it. No, we're not in the middle of it. I think things are going to escalate quite dramatically from here in the years to come. And partly is because the resentment is going to come. Everybody likes to blame everybody else for their own mistakes. So for us, it's the Chinese. For the Brazilians, it's others. And so as those protectionist measures are being introduced, we're going to see the real problems. Just as during the Great Depression, the Depression was caused through trade wars. And that is only going to happen down the road. And again, the Europeans, they don't have this trade and current account deficit that the U.S. has, and so protectionist measures hurt countries that have a current account deficit the most. And again, the Europeans, I believe, will be doing relatively okay, at least as far as the currency is concerned, as those tensions heat up and as that volatility is probably going to go up in the future.
But But let me ask you, I mean, in terms of, well, let's talk a little bit more about the euro, because you said back in June, you mentioned to Tom Keene and me about $1.30 on the euro. We're at 139. So I do need to get you, or if I can, get you on record. Where do you think we go from here on the euro?
Sure. Well, one of the reasons why I'm always reluctant to give a price target, and only gave one to Tom Keene after he pestered me, was that you just have to revise them when you reach them. When you have an environment that we were in earlier this year, you have so much money being thrown around by policymakers. And now, for example, you have a new phase, and that's one of the reasons why we've moved beyond that, is because the Federal Reserve, much earlier even than we thought, moves over to communicating about quantitative easing. One of the things Bernanke said in Jackson Hole a few weeks ago, he meant it as a joke, but one of the things he said is that if inflationary expectations are too low, it wouldn't hurt if the public lost faith in the Federal Reserve, because that would help raise inflationary expectations. Now, if somebody pursues such a line of thought, of course, you can go anywhere with the dollar. So for the time being, yes, we think that it's appropriate to be in this neighborhood, and the dollar fell very quickly. But at the same time, remember a while ago, the euro was even substantially stronger. And with the types of policies we have a Federal Reserve that intentionally, in our view, wants to have a weaker dollar, particularly because Bernanke thinks that a weaker dollar is not inflationary. We disagree with that. We disagree with the policy approach by the Federal Reserve, and that's also where negativity on the dollar has been coming from for a while. But still, we do think the euro can go substantially higher from here.
I want to ask you, Axel, about the dollar by way of China, because, of course, everybody here wants China to allow the yuan to appreciate, and everybody in the world sort of assumes that if the peg was lifted, it would automatically shoot up. But Carol and I spoke with Jim Chanos a couple of weeks ago, and he maybe is the only one, but he thinks that the yuan would not appreciate. In fact, that it would devalue after a while, maybe, because of the bubbles that he sees in Asia and in China specifically. What do you think about that view?
Well, a couple of things. First of all, every country acts in their own perceived national interest. I say perceived because it may not be the same thing as the national interest. And so the Chinese will act when they perceive it in their interest. What will get the Chinese to move is inflationary pressures. And if you have a currency peg, but your inflation is higher, as it is in China versus the U.S., you already have a currency appreciation on that basis. So, of course, depending on how long it takes, at some point, if you move to a free float, it could be that the yuan is weakening. But what we do know is that the wealth is overall moving to Asia, and of course it depends on how policies play out. What we also know is that the Chinese are taking it very seriously to move towards a freer floating exchange rate. They're now allowing the bond issuance in local currency. When investment bankers go around, government officials join them to encourage them to have the contracts done in yuan. They're just not moving at the pace we would like them to move. And by the way, just one comment on your conversation from earlier, we have global imbalances, but we've always had global imbalances. That's nothing new. The question is, how are they being addressed and how are the valves functioning? And the currency is the most appropriate valve. And so by all means, over the medium term, the Chinese have to move in that direction to help alleviate some of the pressures caused by these imbalances.
Hey, Axel, got 10 seconds left. I got to ask you about the Aussie dollar. I mean, that just seems to keep going up and up and up. What's the outlook for that currency in your view?
We like the Australian dollar, except everybody else loves it, and that's why we've been putting more money in the Canadian dollar and more money into the Eurozone as well, because the Australian dollar is loved by everybody. But at the same time, we continue to have a nice position in it, and we continue to believe that over the medium term, it will do very, very well.
All right, got to run. Axel, as always, thank you. Axel Merk joining us here on Streets.